Hey folks, Jordan with My Strategic Forecasts Inside the Numbers Live. And I wanted to do something a little bit different today and bring to you an interview I did with one of our members. He's been an active member for the Inside the Numbers and Inside the Numbers Live. He's done extraordinarily well trading, loves to trade options, has made several $100,000 over the past while. And we conducted this interview for the Inside the Numbers live room, and I thought it was interesting and one that was worth sharing with you all. So here's an interview between myself and Cirillo, who is one of the Inside the Numbers live members. All right.
Hey, how are you?
I'm good. How are you doing? Can everybody hear Cirillo okay? For those of you that don't know, Cirillo has been a member of ours in the live room probably since the beginning, right?
Yeah, right about the when David started the service for the live, I joined right away. And before that, I've been a member of his Inside the Numbers for over 2 years.
That's a long time. So you've been trading inside the numbers stuff longer than we've had the live room. Tell us a little bit about like how you got into trading. I fell into it just because I like it, but like was that the same for you, or like did you find it through somebody you knew?
I've been dealing with the markets for about 15 years. I just started, just buying and selling equities or so. Come the pandemic, things got extra spicy. And right before that, I had always been buying and selling, but never in a structured form or analyzing anything, just from, word of mouth. Oh, this company, this company. So then a friend recommended me to some other guy that sells a program, not a program, but a book. And I just started learning analysis overall. The other guys had some different kind of analysis, basically looking at money flow, looking at certain how stocks build, price build stages and stuff like that. And then I had a friend that said, hey, I have this guy from My Strategic Forecast. He sets out stock and targets. It's more structured, obviously. The way David does it, it's not so much esoteric, where a lot of other services are really esoteric and like looking at lagging indicators and stuff. But in the end, we know price is king. So that's why I kind of stuck it out with David. And I actually did not take his course, the Lazy Imini course, probably a year and a half after I started Inside the Numbers, because I was so interested in just getting a trade, and I was
So
basically.
what was it like when you were first getting into trading? Like, I mean, was it just, I mean, I always found things very overwhelming, at the very beginning, because there's so much information out there. And the first trade I took was November 2007, which was the worst, time to get it into the market because I was buying in at the high. But like, what was your experience as you started off?
So ignorance is bliss. So when I started, I knew nothing. I remember one of the biggest early trades I ever took. I remember it was a dumb amount of money I made at the time, for a beginner trader. I made like $5,000-6,000 on a single trade. I was watching the tennis, the US Open, and I saw Orbitz. They were one of the sponsors, and you saw it everywhere. And
Yeah.
I just bought it. I bought, whatever it was at the time. I just threw money at it blindly, not knowing anything. And then a week later, it popped for like 30-40%. And obviously you're hooked at that point. You're like, oh, okay. My earlier times were a lot like that. And, just buying stuff of companies or things that I saw around. I didn't get into really analysis of either fundamental or technical analysis till really recently, till when I found David.
So do you think that a lot of your initial success was actually more due to luck than anything else?
Yeah, luck and just looking at things and being like, oh, Apple. I have an iPhone. Let me just buy some Apple and just looking around, And I guess it's kind of lucky because most of the stuff you see around is large cap, so you can't get
Hmm.
too hurt. And when you start getting into the weeds and learning more, you start doubting yourself because you see 30 conflicting things. You start learning about RSI, MACDs, like David calls them, Joe's indicators. Now you're looking at 30 things, and one of them's telling you up, the other one's telling you down, and you're just seeing what tells you the most up. You end up kind of flipping a coin instead of really trading on what price should be and price action and maybe the fundamentals of a company. Now what I do, I kind of put together everything I learned from looking at a company's fundamental. Like in these times, I'm looking for companies that have low debt, that have high free cash flow, good price, and that, technical analysis from what I learned from David matches. So if all those things match, I have even like he calls a full stack, obviously what he teaches in Lazy Imini Trader. But for me, I try to build an even fuller stack by looking at fundamentals, PEs.
But you're also a pretty prolific day trader too, if I'm not mistaken, because you've had a lot of success using the commentary and kind of trading the SPY. I believe you use options mainly. You don't do futures, right?
No, I don't do futures. So I do options, and mainly because I am limited by my broker, which is Webull. They don't have futures, which I think it's better for me because I probably could get in more trouble in futures. I've become a pretty good day trader using David's notes, like just seeing the numbers that he has. Like just now, you could have, if you're seeing the 377.45, and you're like, I could take a short there, and my risk reward is if we go to yesterday's high, I'll cut it. And
Right.
my reward is coming down to 374.40 or something, or back to 375 because we know it's ping ponging there. So I just use his numbers. He's giving these numbers out. So there's no mystery. And now what I do when I day trade, I do risk reward. So I do a 3-to-1 risk rewards. So I can lose $1 or win three on a trade. Let's say I take a $10 stock, and I know my target is $3 higher, and I know my stop is $1 lower. What this allows me to do is basically I can lose three trades and win one, and I break even. So there's a high possibility of that happening over time. And if I win two trades, I'm already up no matter what.
One of the things that we talked about, especially since you joined the live room, was that it was something I struggled with too, was making sure that you let your winners kind of run and getting the most out of it. Talk a little bit about where you're still working on your trading and what you're focused on to kind of improve your trade. Because, I mean, you said you've made tens of thousands in the past few months when everybody else is struggling, but you're still trying to improve, obviously. So, like, where do you try and find things?
The current thing I'm working on, and we've spoken about this, is cutting losers fast. David talks this about all the time. You want to know when you're wrong quickly, fast and quick. Band-aid, and letting the winners run. So what I tend to do, I'm obviously in this volatile market, you're so fearful of giving back any gains, or the worst thing you could do is look at the amount of money in the account and see it can go up and down. So I try to never look while I'm trading at the money going up or down. I'm seeing where price is moving, where it's bouncing off, because as soon as you start looking at the amount of money that the trade is made or the trade is losing, emotions get in the way, and I think that's when you start to lose. I've been trying to be less aggressive with profit taking on my runners. Since I work with options, options can shoot up 20-30%. Recently I had one that just shot up 1,000%.
Yeah, I
It was
remember
a
that.
bit, yeah, it was a bit of luck. It was like overnight. I just threw half of the day's profits into a trade overnight. Obviously, it's extremely high risk, and I know it could go to zero overnight. It was one of those risk reward things where I said, I could either lose 1,000 or make 10,000. I tend to cut the runners really quick because I don't want to give anything back. And you don't give the time for the market to digest things. Obviously, you can get caught, if you're short on a bear rally, or if you're long, the rug can be pulled and things can collapse, and so on. So something that Jordan has kind of helped me out with is, so I usually cut 80% of the position at a certain target, and my targets are short since options move so largely. But then I see it. The worst thing you can do, obviously, as a trader, you look back and you see, and you're like, wow, I missed out on another 300%, or another $200 instead of the $20 that I got. So now I cut half, I let it run, I give time for the market to digest price and see where it wants to go. And then I make a decision based more, again, less looking at the price and how much I've made or lost, and more looking at the charts, seeing where they're headed.
So let me ask you this, right? Because we've talked about this. You reset your account. I think you only keep about $30,000 in your account at any time. You'll make the week's profits, you take them out, but you're up something like a few $100,000 year to date. If you
Yeah, around.
Do you feel better trading in bear markets than you do in bull markets? Or how does that compare to, like, say 2021 or 2020 in your trading?
Yeah, so I definitely do feel better trading in bear markets for a couple of reasons, which I've analyzed and realized it's hard to call a top. We saw David attempt to call a top three times, and then he's like, I give up. I'm just gonna let the market top off, but I know the top is coming. And obviously we saw the top. But in a bull market, the movements that you have on the way up are very micro. If you analyze the candles, compare the candles on the run up, from 2020 all the way to the top, these are micro movements. And you could be like, a day can go up, 0.5%, and you're like, okay, this seems like a good resistance. And then it go up another 0.2%, and just keeps on going up. These micro scale movements in that market, it's kind of you buy and you just go long and you just wait for it to work out. Versus when you're in a bear market, you got these huge, 70 handle swings, 100 handle swings, and intraday you can make a killing. But the swinging in a bull market, trying to find a top, trying to buy at support becomes tricky because things just keep on
Yeah,
floating
yeah.
up.
I thought, one of the best trades that you had mentioned to me a while back, within the past month, I believe, you were like, oh, I'm gonna buy puts on Tesla. I looked at it, I'm like, oh, it's like, yeah, that makes sense. And then like, I mean, the next day it just cracked open. I think you made like 10, 15 grand overnight.
That was around, I think, April 20th or something like that.
Has it
Um,
been that long? Yeah, I guess it has been.
yeah, and I remember I went pretty far out of the money. I remember price was around 1065 or so.
Yeah, it was definitely wobbly out there. I remember you were like pointing at it and you walked me through kind of your analysis, talking through some of the coursework, but I thought it was really interesting. Sorry, I didn't mean to interrupt you, but you said there was a
No,
gap.
no. So I saw like around. I'm looking at the chart now, like April 21st. It had a huge gap up, and then there was a gap from April 5th. And I was just basically shorting the gap. And I saw it run up. Obviously, I was giving it time. And then when it started falling down, like around 1065, I was like, all right, I'll take my chances here at shorting it. I went really far out the money. I remember I went like I did far out the money and far out in expiration. Obviously, you got to give things time. But I did like $800 puts out to 2 or 3 months. And obviously, 3 days later, it just fell. The bottom fell out of it. But I was just doing my 3-to-1 ratio where I knew at the if we got anywhere close again to the top of that day's price, I was going to be out of it. But my target was down to 900, where it had recently been just the day before.
You trade stocks and move, you just don't trade it as often as you do the others. And when you do it, you actually still apply that 3-to-1 approach, because you try to make sure that you're managing your risk relative to the reward, even on the stocks on the move, right?
Yeah, so I don't take as many stocks on the move because one, I've been killing it just with SPY options, and that's been my main vehicle to make money. And stocks on the move, obviously, you cannot and you should never do options on them because most of those stocks, the options liquidity is small, the
Yeah.
spread is big. For a stock on the move, for me, if I put 10 grand, let's say I put 30,000, and I get that 1%, it's $300. Where on the SPY, I get 10 handles on a $10,000 position, I can make anywhere from 500 to 1,000. Obviously, it's completely different things, different vehicles, higher risk on the option side. But when I use my management, my risk reward management, I get a little bit more juice out of the orange using options on the SPY.
Because we talk about the stocks on the move. You asked me once, you're like, why do you cut it off at, this percent as opposed to letting it try and get a little more? And, I showed you the data and you're just like, yeah, you're like, you tend to, and you do a damn good job of selecting the ones that are going to get like 1.5%, 2%. And that you tend to gravitate more towards those than, just all of the stocks on the move in general, right?
Yeah, and I try to. I mean, like you never know which is the roller coaster ride, as David says.
Right.
But if I'm gonna take a risk of putting 20 grand, 30 grand on a stock on the move, I need 1%. I can't do point 0.8 because if not, it's really not worth the money that I'm putting into it to get. I mean, don't get me wrong, 1% is huge. If you can get 1% of your portfolio a day, it's ridiculous. But when this market is so volatile and you can really trade around the SPY moving around so much, I'd pick the SPY as my main vehicle for now. But on
Yeah.
stocks in the move, I still, when I see something like today, eBay, I was like, man, I really like that. I'm looking at the pre-market. I look at the volume. I'm trying to figure out how David gets his prices. Sometimes,
Oh,
I look.
he'll never
Of
tell.
course, I get it. It's his patent. It's his moneymaker. But when I see a number that matches his, and I understand that number, I feel more confident on that trade.
That makes a lot of sense.
Yeah. When I don't get it or see where it's going, then it's harder. It's like when somebody tells you, "Hey, buy the stock," and you just buy it blindly, and you don't know why. You don't have a thesis. You don't know anything about the company. Like I had a friend tell me, "Oh, I bought BNGO. My friend told me that it was going to be big," and I was like, "Do you know the name of the CEO? How much money are you putting into it? What's their fundamentals?" Obviously, this is not what I'm looking for in stocks on the move, but it relates to if David puts up a number, I want to see where he got it from because then it builds a better case for me to feel more confident on the trade. If I don't feel confident on the trade, I'm probably going to get stopped out because I'm just going to look again back at how much it's down and I'm not going to give it its hourly close. And then I'm thinking, could it be a shit burger or not? But if I have a full case where I was like, I know this is a great price because A, B, and C, then I'm able to stay in the position for longer and have it work out. As we know, when we see his videos, the numbers work, no matter what. But what happens? Our emotions get in the way. And every now and then when we're in a shit burger, we get scared of the other ones. We don't go as hard, and making profits on the longer side gets a little more difficult.
Emotions are one of the hardest things to get through. I think what I've liked about your style is it reminds me of some of the best poker players because they use what's called selective aggression. They're very, very careful about which hands they play, but when they get into them, they hit them hard. Psychologically in poker, it does a great job of pushing your opponents around so that, you can kind of get an idea of what they're going to have. But even in trading, what I like about it is that you do it because, you have a lot of the elements of the different methods coming together, like you talk about with the stock on the move, to give you your full stack, to give you the confidence to trade it.
Right. And in poker, it's just like, when you have a great player, he'll show you what he wants to show you. And in your head, you're like, oh, okay, he's a conservative player. And then you don't see the bluff. I used to be a poker player myself, and I come from the gambling world, and I guess trading has kind of substituted a little bit of the gambling, since trading does have a little aspect of gambling to it. It's somewhat speculative, but here you have a higher percent chance of winning, since you have more data on your side, and you can definitely restrict your losses, and you're not playing against anybody. You're competing against yourself in trading.
Now, let me ask you this: since you've been in the live room, you were a profitable trader before the live room. What would you say is the thing that it's done to help you out the most? Is it from our conversations, it seems to be that it's kept you out of trades that you otherwise would have taken, or it's kept you in trades that you otherwise would have dropped?
So when I first started the live room, I would take when a trade would get too close and then bounce away. I didn't know what too close was. And you would make it clear, you're like, I'm definitely not in here because it's got too close. It already gave the juice. And sometimes I would email David, and, I would find out much later if it was too late or not. And a lot of time, obviously, it's trader's choice, what is too close? Is 0.5% too close? Is 1% too close? And it all depends on the stock, because maybe 0.5% for a stock like Tesla that moves 12, 13, 14% in a day, 0.5% is not that bad. It helped me, when you would call out what too close was. Also, hearing you take your profit targets was important, because I'd get greedy. I'd try to get more than that 1%. And that's when you get caught with your pants down, because it does go up more than that 1%, but there's obviously other people taking profits at certain different targets. And then it suddenly drops and you're in the negative and you didn't take that 1%, instead of staging the orders, which I didn't used to do. You immediately, once you're in, you put what your out is, which I didn't do. And that made me not make as much money, because I just wasn't taking profits along the way. I was being greedy, which, now I'm at the other side where I'm being greedy, taking profits. So I guess it's building a balance of those things.
That makes a lot of sense. Yeah, it's not easy. Look, I think you were fortunate enough that you didn't have to spend a lot of time in the unprofitable camp before you made it to the break even and then the profitable category, like many of us do. And it's helped you out. For those that don't know, Cirillo is actually a music producer by trade, correct?
Yeah.
So you went to school for music. Trading was just more of like an interesting thing that you fell into, which I think speaks to the universality of, learning how to trade. Like, it is a skill that you can learn. And I thought it was fascinating because, we swapped YouTube videos of one of the music videos you had done, and I saw your setup. And it's funny because your trading room is your music studio.
Yeah. So I have two screens, and basically my studio is now, when I'm not producing, is my trading room. I got this double screen set up, and I got David on one side, I got my charts on the other, and then I got the live on another corner. Trading and knowing this world is such an amazing skill to have, because one, it's so much money to be made when you're doing it. Risk management. I've been looking at David's videos since 2020. What I actually did is that I went back and I started watching from 2019 videos, old videos. They were not relative to what was currently going on. And I started watching videos from July 2019 all the way to March 2022 on the collapse, just to see, how he was teaching things. I'm probably crazy. I'm probably the only person that would go back and watch, 150 videos that were not related to what's going on now. But for me, it was such a learning skill because I wanted to see what David saw on the run up to what happened in March, which obviously it was a black swan overall. I'm sure everybody was calling a top and blah, blah, blah. But truly, COVID is a black swan event. It obviously coincided with technicals. We were too high, things were too hot, we were over resistances. I think that's actually, if you guys would take your time, if you're curious enough, like I am, go look back at those old videos leading up to 2020, and I think you could find a lot of learning things and seeing how things fell apart and how kind of they compare to what we're kind of going through right now, which in my mind is a short correction, but nobody knows. That's the best thing about the market. Nobody knows anything. If anybody tells you for sure this is going up, then that's when you really know they don't know.
Yeah, that's true. I laughed a little bit because you'll hit me up and you'll send me your ideas and then you'll change them like the very next day. But you aren't tied to any bullish or bearish position. You kind of let the market dictate what's going to happen. And I think a lot of people might normally see that as indecisive. I think it's more about being nimble and changing with what goes on. Because, a good example was you and I had shorted oil a handful of days ago, and, you explained your thesis. So you're like, here's where I'm wrong, made a nice trade out of it. We were playing all the way out into August with it.
I think changing your mind quickly when it comes to business and finances depends what you're doing, but overall, it's a good thing. Okay, I'll talk big picture and I'll bring it down smaller picture. Let's talk about the Fed. So the Fed loves to oversteer the boat. The problem with the Fed is that they're steering a cruise liner. It's not a jet ski. So they can't just turn left quickly. They'll start turning. You won't see the boat turn until 6 months out, a year out. But during that time, you get the CPI every single month that just tells you what these prices went from this day to this day. And then you get the unemployment every other month. And you get all these numbers coming at them, then obviously markets react, they overreact. So then the Fed needs to do something to kind of hold the market down or keep the market up. And then they overreact as well. But they don't change their mind because they're so scared of, like Powell saying, inflation's transitory. Yeah, we know it is, over 10 years, inflation's transitory. But him not being able to change his mind quicker is because he's steering a cruise liner. Now, when it comes to trading, this is way faster. The movements in the market are way faster. So the faster you can change your mind on a thesis or a trade and, a trade not working out, it's basically what David says. You got to cut your losers fast and quick. That's the way the market works. You don't want to be caught with your pants down. And being able to change quickly is what gets you out of trouble.
Like you're not changing it like every 5 minutes. Like you sit there and like you go through a full analysis every time though, correct?
So I've been telling you that, I think we're going to get a crazy bear rally up in the bear market into the end of the year. And, and I'm seeing dozens of things. But I think when those kind of things happen, they happen quick and they leave people behind, which tells me in the short time, we probably still might feel more pain because bears still want to be really right about their theses. Bulls think that we are going to just shred up, but markets are smarter than everybody in them, and they're going to chop everybody up. So I'll develop a thesis, a big thesis. So my thesis right now is that we're going to rally up. We're really going to shoot up quickly, but time is more important than price. Yeah. I've seen so many of David's videos. One of the things that really sticks with me in my head is, you want to have fun at the party. You don't want to be the first one there.
And that's something we both have been talking about recently is, making sure that we have a little bit more patience because, it's easy to get pulled into trades very quickly.
And I think the most important thing is letting the ego just go, knowing when you're wrong and being like, okay, my thesis was wrong, but knowing where it went wrong. So I was like, just like any trade that I go in, I know where I'm going in and where I'm getting out. So I always tell myself, where am I getting out? What are my targets? So my target is 3 up, 1 down. And I know no matter what, I have to get out there. So it's basically the same. You know where you're wrong or you know where you're right. And sticking to that, not living on FOMO or hopium, no, just treat it as a business, look at the numbers, and that's it.
Yeah, that's true. Cirillo, I appreciate you coming on.
I appreciate having me.
That is Cirillo, trader from the room, just like one of you all.